One of the things that you may not be aware of is when you go with an FHA loan and you go with a conventional loan, a lot of the times the FHA loan will have a little less rate. FHA, you're buying a $400,000 property, your down payment's $10,000. FHA has a 1.75% upfront mortgage insurance premium that is added to your loan. Where if you go conventional, you might get the 6.75, but there is no upfront mortgage insurance premium. You put $10,000 down, your loan is $390, not $395. FHA versus conventional. Which one saves you money and which ones don't? And let's bust some myths while we're at it. My name is Mike Mendiola with Responsive Mortgage, and I've been a lender for over 10 years, helping people buy homes they didn't think they could afford. So FHA versus conventional, right? One of the big things that I always hear is, I got to go FHA because I'm a first-time home buyer. That's a myth, right? Because if you have good credit, 700 and higher, conventional actually has a 3% down payment, right? Where FHA has a 3.5%. One of the things that you may not be aware of is when you go with an FHA loan and you go with a conventional loan, a lot of the times the FHA loan will have a little less rate, right? So sometimes even up to 0.5%. So you may have a 6.75 on conventional, you may have a 6.35 or a 6.25 on FHA, and you're like, hey, I got to go with the lower rate. That's the best for me, right? I'm going to have less of a payment. Wrong. Right? Because what happens is FHA, you're buying a $400,000 property, your down payment's $10,000. FHA has a 1.75% upfront mortgage insurance premium that is added to your loan. You don't have to bring that money to closing, but it's essentially another 1.75% of a down payment. They're just rolling it into your loan. So when you look at your loan estimate, you're going to say, hey, I'm putting $10,000 down. Why is my loan amount saying $395,000 instead of $390? The reason being is because of that upfront mortgage insurance premium. So think about it this way. Not only is that being rolled into your loan, but you're paying interest over 30 years on that 1.75% that you thought because of the lower rate. Where if you go conventional, you might get the 6.75, but there is no upfront mortgage insurance premium. You put $10,000 down, your loan is $390. Not $395 like it is with FHA. So that's one of the biggest myths that I hear whenever I want to go FHA, it's that 3.5% down payment and I have a lower rate. No. Conventional is a 3% down payment for first-time home buyers, as long as you're making under $120,000 a year and you have no mortgage insurance premium, upfront mortgage insurance premium. So the second part of that is if you stay with an FHA loan for the whole 30 years, you're paying mortgage insurance for the entire 30 years. With a conventional mortgage, you pay it until 20% of that loan is paid off, and then it drops off. So you almost get like a little bonus. It's a payoff, right? So now you've been making this mortgage payment for all these years. All of a sudden now you're saving $150 a month, $200 a month because you're not paying mortgage insurance premium anymore. Now you can take that money, put it into your principal every month, and you pay off your loan faster, right? So there's a lot of things to there. Secondly, the other thing people think is like, oh, I have to have perfect credit. No, you can do conventional even down to a 620, same as FHA, right? FHA will go down to a 580, but if you're down to a 580, you're going to have very, very tight debt to income ratios. So you're almost to a point where you can only have 28% of your income can go towards the actual mortgage loan, and only 42% can go toward all of your debts together. Where on conventional, you can go to 33% and all the way up to 49.99%, right? So those are some of the myths that you hear when you're talking about FHA versus conventional. And when I put the numbers side by side for most people, and I show them the 6.75 and I show them the 6.25 FHA, and then with all the additional fees with the upfront mortgage insurance premium and what conventional looks like, conventional for 9 times out of 10 is going to be right at the same price of FHA, if not lower. That's what I do. And I show people the rate sheet. I'm like, look, do you want to buy the rate down? You can, but does it make sense in this environment right now? Maybe not. Maybe it does. Those are some of the myths that I have. Or if you have good credit, you want to do 3% down, conventional is the way to go. If you're struggling and your credit's not that great and you need an avenue to get into an FHA loan, then FHA fits that because it gives you a low down payment. It gives you the lower credit score. They're more lenient to get you approved. And then what you do is you get your FHA loan, and once you get your credit high enough, you get to a 660, a 680, a 700, you're going to refinance into a conventional and get out of that mortgage insurance. Those are the two things and some of the myths that when it comes to conventional versus FHA. For my money, conventional beats FHA every day of the week, but FHA has its place, especially with people that have had some issues in the past and a little bit more leniency. Anyway, my name is Mike Mendiola with Responsive Mortgage, and if this content was something that you'd like to see more of, hit that subscribe button at the bottom, and I'll see you soon.